The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. It doesn't matter whether you're from Azerbaijan or San Juan. We always love to come to you at this time. And, oh, you don't have the sound effect anymore. Oh, how can we get by? Okay. I thought you said I thought maybe you meant you couldn't hear me. Anyway, got the S&P's up 31 points, the Dow up 43, NASDAQ up 233. Volume very, very light for a push back up into the highs. We can look at some of them, but starting to see some of the highly shorted stocks roll back down. Boeing's off about 3%, off $190 for the high today. We'll look at some of those others. Got a lot of other stuff going on in the market today. Of course, options, at least into this morning, showed lower for the options expiration on November 20th. This is Delta Neutral Day, the day that those market makers go Delta Neutral. That's why it's called that. Some people call it Weird Wally Wednesday for Wallenchuk, a trader who's, I guess, fallen off the edge of the planet. I haven't heard of him in a long time. But he was the first one to bring it to my attention anyway. Like I said, very low volume. We'll look at some of the bigger stocks here, but not a big bounce. Of course, 80% of options expiration cycles are bullish. And so you've got to have a fairly decent case to say that that you're going lower for the next week. I think we have a fairly decent setup for that. And, of course, it's always about the risk reward. There's about a 1%, maybe 1.5% bias over the last 20 years from today into options expiration. And there's but on those other 15, 20% of the times that it goes down at about 3%. So there is quite a dichotomy from when it goes down. But again, we talk about it a lot, but the market takes the stairs on the way up and the elevator, and sometimes just jumps off the roof on the way down. Yeah, that's a lot of that. Okay. Oh, anyway. I was just kind of nodding off here. I wanted to get to a little history today because I think it's important. And kind of just rip from the headlines. Had somebody ask about this last week, and I said I was going to wait for this week to talk about it, mostly because on this day, something did happen.
And it's just a little bit of history repeating.
Wow. That may be too loud for me. On this day in 2000, we had a gentleman that is well known in the market, mostly for calling the N of Enron, saying it was a fraud. It would take pretty much another, I guess it was midsummer in 2001, for that to come to pass. And the reason why he was pretty sure it was a fraud is something called Benford's Law. It's been in the newspaper for the last week or so. Binford's law stated that in 1938 by U.S. physicist Frank Binford, but actually discovered kind of in the late, about 1870s or so. It posits a list of multi-digit numbers drawn from a wide range of natural and man-made phenomena. The leading digits aren't distributed in a uniform way. You may expect the numbers of 1 to 9 to appear roughly equally in frequency in the first slot. That means a $100 stock is just as likely to see a $900 stock. In fact, lower numbers are much more common in that position than higher numbers. The digit 1 appears about a third of the time, 2 the next more often, and each subsequent number up to 9 appears with less frequency. 9 is the first and only about 1 in 20 cases. I've got some nice charts here for the formula, but that's pretty much it. And the reason why this is so important is a variety of reasons. But first of all, if you're out there looking for financial fraud and you are a financial detective, as some people call themselves, big short sellers, you see these guys always on TV hawking the latest short sell they have. Most of these people start off with Binford's law looking at the books. If there's going to be a merger and acquisition, the first thing they go and do is start throwing on Binford's law on it and see how close to the distribution that it should actually be. So let's ask some questions about Mr. Binford's law here, and look at the chart here from Enron. Why they were so sure that this thing was a fraud was that the number of ones was way beyond what was supposed to be out there, mostly because profits that should have been about 100% were actually 1,000%. And there were enough of them out there to really mess up what it should look like. It should look like a nice curve that we see on the left here. And there is a reason why I'm bringing it up, because we're gonna get to this in just a second, but you can make some money on it. And the data is fairly good no matter what day you go out on it. Basically you should be able to see a nice curve, and, whether or not it's the IRS doing an audit, you'll find that if the data actually comes from man-made sources, and i.e. it hadn't been fixed or it's not a fraud, you're going to see this wonderful, nice curve instead of the one we have on the right, which points out exactly what you think. Now, does this tell you that there's absolute fraud? The answer is no. But it tells you there's some smoke. And it's your job as a financial detective, whether working for the IRS or a short seller, to go in and see the smoke and go find the fire. About 85% of the time, you will find something glaring coming out of the books. And of course, probably one of the best known short sellers found this out. We got a few more things, but I'm going to tell you how you can make money on Binford's law in the market when we return.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as I said, we're kind of waiting for options to come out here. It's not uncommon to see the morning up on a day like this and the afternoon down, but it's more about the close and certainly about the data for me. So not a lot for me to do other than sit on my hands today and wait for this to play out. I think we've got a pretty good chance for the next 7-8 trading days. I guess it'd be 7 trading days to see some significant downside. But I'll probably run the numbers about 3:30 and put out a update to my subscribers if there's anything else that we should change. Question is whether or not I want to put on some more short positions. And some of at least the one I have today in the daily has had a fairly good test. So we'll see how that works out. Anyway, we were talking about Enron fraud, and of course, the part I was thinking about, the guy was Jim Chanos. He became famous for this. But generally, when you find out that people are talking about fraud in one of the stock market stocks, it's they start off with this, and then they start looking elsewhere. Interestingly enough, I ran the numbers here this morning because I thought I actually was talking to a few people and they wanted to know whether Binford's law worked for the stock prices itself. And this is a chart of the stock prices out of about 5,700 equities yesterday. You come in almost exactly where Binford's law would be. Now, it's a little off. But the big part here I want to show you is this lonely little 9 out here over on the right-hand side. The 9 will appear the least over a series of days and trading days. And the way you can think about using this is if a stock was let me back up for just a second. One of the reasons why the number 1 will be always a great deal more as the first number of any price or financial transaction. You can think about it like this. If you had $1 and you get 10 cents, you got $1.10. If you got another 10% profit on it, you're at $1.21. You're going to be at that one number for a while. If you get to 100, it's less common, but still going to outweigh itself. But over time, this is exactly what the numbers look like. Now, when we get to number 9, here's the thought, and I've back tested it, so I know it's true. That is, if a stock, let's say, is $15, and over a couple of years, it gets up to 90, and it actually hits that 90 and closes over it that day, it may take a little while, but you've got about an 85% chance that that stock goes to 90. A lot of people on Wall Street will just automatically buy a stock when it hits 90, just assuming it will go to 100. And like I said, there's few things that get you anywhere close to a huge lead in the market or a huge edge. But a $90 stock goes to 100, and there is a reason why. It just people are just conditioned to understand that a 9 is eventually and probably fairly quickly going to turn into a 1. So there it is, Binsford's law. A lot of other reasons you can use it. In fact, very famous in fighting fraud, not only standard financial fraud, but fraud for food assistance programs, a whole variety of stuff. If you put the numbers on it, there was a big program, I think it was in Texas, and if you spent less than $50 on an expense accounts, nothing ever got checked. So they found out that a whole bunch of 49s were there. And of course, the number 1 didn't show up near as much as it should. So they found fairly quickly the kind of fraud that was going on. But you can aim this at just about anything. If you have your own business, other stuff. Doesn't work for a lot of things. But if you're trying to find, especially, I think the case that was well known was, I think they call it SNAP now, Food Assistant Program. If you want to find phony addresses, and you've got a bunch of addresses, just look. The addresses, at least the number part of your address on your house, 90%, a 30% chance that the first number in it is a 1, and the percentages actually go exactly that way down the line. So if you're trying to find a big mess of addresses that are maybe fraudulent for credit cards, that kind of stuff, they've used this forever. Few things as well documented as Binford's law, especially now in the stock market with Jim Chanos actually making it fairly popular. But at the same time, I was fairly bearish on Tesla. And you should have seen this one. Everybody knew there was fraud in it back after buying Solar City. But for the life of them, they couldn't find it quick enough before the company grew out of actually probably some fairly large shenanigans. But that's when you ask Chanos why he was short, that was one of the reasons. Okay, what else do we have going on here today? Let's go ahead and start looking at some charts. I got some emails. Of course, you can email me at path@tfnn.com. You can also call me, 877-927-6648, and not a bad day to do it. So you can get on that. Anyway, we're up 28 points on the S&P cash, 224 on the NASDAQ, and up 7.5 on the Dow. So not much going on that. See what we have here for the question, if I can find it here. Take a quick look at Fiverr. What is it? FV, is it FVRR? Yep. So you got a bit of a pullback, But again, you're just bouncing off this 135 area. Actually got to 129.21 here yesterday, and you're getting a bounce out of it. That's where support should be. And of course, if we look at retracements, let's see if we got anything else. Let's see, get back here. You're back into the trading range. What I dislike is the same thing I saw in gold last week. That is far too much energy on the way on the downside, which is actually going to get me into the next question. Return, just like MacArthur and the Philippines, I shall return.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Chart allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, the questions that we have here. Of course, that was Fiverr. I am not bullish, but again, I could change my mind by the end of the day. But I think some of the stocks I'm out here looking at actually look fairly decent. So, fairly weak. Again, you busted the previous low with higher volume. you want to come down here and test 129.21 on Fiverr, FVRR. Again, this was a stock that did it very well during the shutdown, and my guess is that we're kind of looking down the end of that barrel in a couple of months. So I imagine that a lot of these stocks that were the darlings of the shutdown are probably have topped out for a while. You want these things to pull back and consolidate for a long time. Another polar plunge. Well, you never know. I don't have a polar pop today, and I'm not looking for one, but we'll see by the end of the day. We talked about Boeing. One of the things I look for a lot of times in the markets when they're hitting new highs, but getting ready to turn around, are when the dogs of the market run all the shorts out. Of course, you had the big gap higher. You had nice volume yesterday. You're pulling back on lighter volume, but again, everybody's been shorting the daylights out of this thing for 3 days now. Probably take a while to come back. So I'm not such a big fan of hanging on to this. If you made some good money, I would have been out by now. Again, at the very tail end of any kind of top in a market, the ones that are heavily shorted and the ones that everybody think are going to hell in a handbasket, we covered that the other day, tend to pop, especially the highly shorted stocks. When everybody's run out of them and there's very little short interest in it and everybody's scared to pull the trigger, that's normally when you have the big moves down. So I would worry that you fill this gap in Boeing fairly quickly once all the shorts have been fired out. Now, today is Wednesday, so we're probably hitting some kind of margin calls throughout the day if anybody was silly enough to be short and not cover fairly quickly on Monday. But, a lot of people have been thinking that the thing to do was just be long. And, of course, new traders tend to look at margin as something that gives them a kind of a supercharged profit. But generally what it does is end up taking the money away from them twice as quick as they can make it. So Boeing, I would be worried that it comes back to about 166-ish. But, a long term, maybe after the first of the year, I wouldn't mind maybe thinking about owning that for a better trade as things come and turn around a little bit in travel. Right now, all these things, just huge moves, mostly on short covering and squeezing those margin players out over 3 days. So don't be surprised if we see some weakness tomorrow, especially in these stocks like Boeing, Carnival, the CCL. Let's take a look at that. Because these guys only had some. This one gapped, already kind of coming back. But again, maybe you got everybody to cover. But generally, they don't let people out highly short on these gaps that easy. Okay, what else do we have? Do we have anything else? Zoom. Today's price action. Okay, so they got all this gap down here. You think we're getting the gap down that was created on Monday, this Friday? Don't think so. Like I said, now I'll change my mind after I see the data maybe. But for me, I would want to see Zoom test 345.68, that September 8th low. You had 13 million shares out there. You didn't quite get it with yesterday's candle. You've got double gaps there. Double gaps act as very good support, but at the same time, they tend to get tested a great deal. I would say the chance of that 345, 350 area being tested before it moves back higher would be fairly good. But like I said, I think that most of these stocks that you bought in the shutdown are are probably for sale for months to come. So I'm not a big fan of it. I'd look for a faster horse, which is on Wall Street, they call it something different. They say change the name, which means that after you had a huge run in something like this, quit going back to the same well. Try to looking for a better, faster horse out here. I just think it probably goes sideways for a while. Give me a call, 877-927-6648. Let's take a quick look at Microsoft. You gap down with a lot of volume. You're up on nothing. Again, I'm kind of thinking this 196 to 199 area for the two previous lows in Microsoft could easily get tested. One of the things that I really dislike about this market is the incredibly good news in advanced micro devices, and it's not helping it. When you start seeing literally the best kind of news that you could ever ask for from AMD, and you're not getting and making new highs, I think that tells you a little bit about the semiconductor space, or at least chips. So to me, I would think that you at least want to be looking at about 72.50 on this one on the way back. You know, we'll probably talk to Tom about this on Friday, but it's hard to think that AMD could actually get any better against Intel. The new chips that they released and the reviews and the speeds and the price, for the same price, or actually for 75% less, you get the same performance as you do as an Intel chip. And actually, you can make some cases that it's actually even better. I don't know what Intel's up to. Maybe they do come out with something that has that new memory technology, and they're just waiting and biding their time. But whatever it is, right now, I would say that 90% of the offerings from AMD, at least in the consumer space, make a whole lot, not just a little bit better, but a whole lot better value proposition that you get in Intel. And with that kind of news, seeing it sold off a bit and not really coming back tends to be a big deal. I certainly suspect Intel could come right back down to $43.30. So we'll keep an eye on that. Yeah, that's kind of it at the moment. And we'll be back. Give me a call. Great day to you.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Detailed on the Tiger's Den or on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And it is Veterans Day, and I want to get this in before we go much further, because I might forget it. But I always love this one clip from Band of Brothers.
Henry V was talking to his men. He said, from this day to the ending of the world, we in it shall be remembered. We lucky few, we band of brothers. For he who today sheds his blood with me shall be my brother.
I cherish the memories of a question my grandson asked me the other day when he said, Grandpa, were you a hero in the war? Grandpa said no. But I served in a company of heroes.
Well, thank all those veterans today. Even though it's about half a hurricane, I'm going to call it a 1 on a 10 scale here for as much people are trying to scare me so far today on the hurricane front here in Tampa. But we shall see. Question in the den is, will I restate why the SPX declines toward the November 20th expiry? And I think there are a lot of reasons. One, we're still waiting for how the Senate pans out in January. Markets don't like a lot of indecisions, especially about big ticket items and the way that stuff will go forward. Other reasons why, just the incredible weakness that I've seen in a lot of these stocks. Like I said, they should be on a day like today, just ripping much higher. And Amazon being down on 6.6 million shares yesterday and only having 3 million on the upside. I just see that everywhere. There aren't a lot of stocks that are coming off the bottom and seeing a lot of people buy them. Now, maybe that changes by the end of the day, but it has been one of the slowest days for volume in the last 5 with all the volatility we had. It just doesn't look like many people are getting in. We may have fewer sellers, but it's not like we have a ton of buyers coming in. Okay. Tampa landfall. The last time there was any real damage in Tampa to speak of was 1918. And before then, the Indians that lived in this area, it was like 1650. We don't It normally gets it almost always hits in Fort Myers, or it will skate right past us and go up to the Panhandle and maybe over to New Orleans. So, yeah, every time they tell us that we're going to have one, it just skates by. One of the reasons why I like living here in Tampa is that historically, very hard to get hit, because as it goes up the coast, the west coast of Florida, the prevailing winds want to push it off into the Gulf and back up to Louisiana or Texas, Mississippi, or maybe even the Panhandle. But it is rare that we have anything. Even in 1918, historically, we didn't really get almost any wind damage. It just so happened that the way that the hurricane sat out there was it pushed a bunch of water downtown, and of course they had very little ability to handle the water back then with the way that the city was laid out. So you had a bunch of water, but what can you say? The right preacher. Hey, yeah, that's like Patton, wasn't it? That I need a snappy prayer to guarantee me a victory. But that was it. Not much going on so far, but my phone was just beeping off the left and right earlier about noon, about the end of the world and everything. And generally when I start seeing that, I was talking about George in, what was the name of that? Seinfeld, where he just did the opposite. Because for some reason, I just happened to walk by the TV yesterday and see that. It said, don't lie to the woman. Just tell her you're unemployed and you live with your parents. And of course, only in the TV would that work. But being counterculture is probably not as bad as one would think. Let's go back here and check the volume real quick. Yeah, we're only doing 6.6 billion shares right now. We got an hour and 12 minutes left. I'm not real happy about that. Now, again, the odds of having a down market over the next 7 days are not high. But generally, you're looking at 1% higher, probably today, 1 point on average, where you're seeing 3% on the indexes lower if the market does close lower. So just a lot of conditions out here that I think really set up a market that could kind of just see a lot of selling, especially in these lockdown stocks as we get closer and closer to having some kind of vaccine, other things like that. I think a lot of people are probably ready to get out, probably tired of and fatigued from all this. So I have a feeling that we're going to push farther a lot sooner. And in fact, I know a couple of people going back to work this week that were working at home. So I just think that's going to continue on and put pressure on these stocks, especially the ones that did the best, which were stocks like Apple. In fact, let's look at that real quick. But again, I don't think there's much in this one, even though it's popping higher. Now, I'm not saying to go out and short Apple. I'm just saying that I don't think Apple's going to save the market if we start heading lower. You got two nice gaps in it. Could you get a third? You could. I don't think you're going to get one. We got it in the S&P. The S&P rolled over, and today they pushed it as hard as they can higher. We didn't have any real volume. Again, the old saying is run it up the flagpole and see if anybody salutes. I just seemed the whole day was kind of lackadaisical. My guess is that if we are headed lower, that we probably should see the market move lower tomorrow. And of course, I've got options to look at. Generally, I like to wait until tonight, get all the data, get a couple hundred options chains for the S&P and all of the ones in the NASDAQ, and just see where the option market makers are heading. But maybe a little higher, my guess from the action today is they're still thinking we could go 100 lower into next week. We'll be back in a minute.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. And question was on GLD. When we talked Thursday or Friday, someone asked me why I wasn't particularly bullish in wanting to chase gold. And I guess you can go back and listen to the show. It's just you didn't have off this leg from October 29th to November 6th. You didn't have the kind of energy you had when you came down from September 16th down to September 24th. And was it horrible? No, but I'm not big. I think the caller came in on this day that it was going up to the high on the 5th. And I'm just not one to chase if the energy isn't already starting to come in at that high, because especially with gold, it loves to just crush your spirit. So I don't know what else you can say about it. Again, I'm not very bullish here for a while. You had a 18 million share low on September 24th, tested with 29 million shares on the 9th. You got a kind of a low volume day yesterday and a low volume day today. Maybe it consolidates out here for a while, but I don't see any sign here that says you should do anything. And again, if the market's headed lower, generally for the first couple of weeks, you'll see gold actually sell off with the market. And at some point, if it gets bad enough, people actually come back. But when the market comes back, generally gold does fairly well if things are really that bad. But just when they're selling stuff, they sell what they can. And generally selling gold is one of the easier things to do in a down market. So you throw the baby out with the bathwater sometimes. Sell when you can, not when you have to. We will see you here tomorrow. Same bat channel, same bat time.